How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is your daily update on US dollar versus Japanese yen. As you can see, I've selected a pair for the new month of June. We're going to be talking about why we picked US dollar versus Japanese yen. So the main reason is there is still a major interest rate differential between the two central banks, the Feds and the BOJ, Bank of Japan. We can see that there's a big rate difference between 5.4%. Seasonally, the DXY is bullish for the month, and the yen seasonally for this month is sideways or neutral. So how did I get to this data or this information? Well, if you come over here briefly, hopefully you guys can still see the chart. Come over here, click Forex. I think you guys can still see my screen. US dollar, get the seasonal chart. There you go. So we got June, some type of decline, and then a rally going up into July. Now, I say this all the time, seasonal tendencies is just a roadmap or a treasure map. It may get you close to the truth. It may not be the absolute truth of what the market's going to do, which is why we have to use the intermarket analysis. We have to look at other currency pairs. We have to look at other macro information. Do we have the seasonal tendencies aligning with what we should see? If dollar's going to rally, is the other fiat currencies like GU, EU, AU, NU, are they declining in the month of June? Let's take a brief look at that too. So let's say we just looked at anything like, let's say, euro dollar. Look for the euro futures. And we want to see if that's inverse to what we're seeing in the dollar. So let's go down till we find the futures. It's probably on page 2. There we go. So June, we got a decline. So there's a rally and then a decline. So I like that. Now, I'm not going to go through every single other currency pair, but just using this as an intermarket analysis and thinking seasonally, the market should be moving in code. Now, last month, we saw that the DXY did not follow the seasonal tendency. We saw how instead of it being bullish, it was actually bearish. So May was supposed to be bullish, supposedly by the seasonal tendencies. That did not come to fruition. We all know that. We saw that dollar declined in May. We're going to see if that's going to come back in a line back with June rallying, right? Forget about May. Let's rally up into June, going into July. If we take a look at the Japanese yen, so first episode is normally a lot because I like to explain exactly what my thought process is on what I'm doing here. So you look for the futures chart or the FX chart, they're literally the same. And you can see June sideways. So that's why I had marked it off as that on the chart here. Got it going sideways. Now, the fact that it's going sideways or it's neutral, I think that other fiat currencies will take advantage of that. So while the yen is supposedly going to consolidate, right, according to seasonal tendencies data, the other currency pair should gain strength over that while it's moving sideways. The carry trade is very strong. I know the carry trade, if you look it up, at this anywhere of like a 20 trillion carry trade is going on. So a lot of institutions and big funds are taking advantage of this carry trade because you get more yield on your money if you just convert your yen into some other fiat currency. So why hold on to yen if you're getting a small rate on it? And even before, it was negative. So there's still a big difference. Even though they increased their rates from being negative to positive, the deficit is still huge. Another reason why I chose UJ was because last month's rain cycle, it was a small cycle. So if you take a look on the monthly chart, you can see last month was a small range candle. And I like that. Why? Because traders that see small range candles typically are going to look at other currency pairs. However, the institutions and the big players, the commercial speculators, those that are really informed and those that control the market, this is a great opportunity for them to take advantage of large dynamic pricing that's going to come in the near future. You'll see this often after a small range cycle, a large range cycle is going to pick in. I have that known by Larry Williams, him teaching that in the book, Long-Term Secrets to Short-Term Trading. He said that a lot of retail traders are going to chase the larger candles psychologically But when you see smaller candles, people get uninterested. They're only interested when they see the price action flying and they already missed the party. This is when I start to pay attention and get interested because I'm assuming next month is going to be a very large candle. And we're only referring to the bodies, not the wicks, the bodies of the candle. We also can see it's a down candle in an uptrend. You can see what happens after down months. Down months supported by bullishness. Bullish momentum comes into play. There is support after months closing down. So I'm taking the stance that the same thing could occur here going into June. Not saying we couldn't have consecutive down months, 2, 3 months, 4 months down, but I'm taking that speculation. We're trying to calculate the risk and try to put odds in our favor. We also like to utilize, if the look back data range, we start at the beginning, the first official trading day of the month, which is June 3rd, which was yesterday. Technically today, because the new candle just opened a couple hours ago. And we go back 20 bars, go back 40 bars, and we go back 60 bars. Find the highest high and lowest low in each one of those quadrants. Those are going to be significant levels to price action. Now, even though that there are other levels that might have clean highs or clean lows or swing highs above or below price action, does not mean it's not significant because we recently just rated this swing low. So now that we talked about why I selected UJ over all the other fiat currencies that we could have been trading, let's get into what I'm seeing currently on the chart and what I'm speculating. I'm assuming and taking the stance that dollar is going to outperform yen. Yes, I know dollar's been on a decline, but I do see all the yen crosses have been going up. And I wouldn't hold it past UJ to continue the rally. After that intervention here in April, I'm not sure if it was confirmed or not. I think it was. This was an intervention. It basically gave back all of what that intervention was used to support the yen. And we can see that for all the other yen crosses as well. So if we just take a brief look down, CAD-J, you see that price is returning back up to that intervention level. NJ already surpassed it. NJ is taking off, right? The carry trade is really strong. You're going to get a lot more bang for buck going back into New Zealand dollars instead of holding Japanese yen. We got EJ basically almost there again. You can see that. We got GJ already got back up to the intervention level here. So I wouldn't be surprised if the Bank of Japan does intervene again to support their currency, but we'll see if they will do that. Taking a look at US dollar JPY, we'll see what happens with this. So back on the daily chart, we'll see that price rated a swing low structure. If I'm looking to be bullish on this chart or this price action at any moment or any notice, I want to see price drop below June's opening price. So if price is going to continue to go higher, I want to see the best buy opportunity come way below in a discount. This is our natural indication to overbought and oversold based on the monthly candle. So this ideology can be transferred or fractal to the kill zone opening price, the daily opening price, the weekly opening price. That is a very known thing for us to understand if we're overbought and oversold. And if we're going to follow the higher time frame trend and we are speculating that UJ is going to go higher, the best buy opportunities is more than likely going to form below June's opening price. And it's going to either be a swing low or a sweep of a low or a sweep of previous daily lows, and the price is going to run higher because it's going to get a lot of retail traders in short, whether that's the first week or the second week, right? Normally the first week, NFP week, get a lot of traders to the table to gamble, flush them out, rinse, repeat. Second week, they may do the same thing. And then after the second week, they may raise it back into their intended direction. That's what I generally like to see. First or second week, third, fourth week, we're going to see price move in its intended direction that they want it to go. Right now, we currently ran a swing low, and I noted off right here today that we ran a swing low. That can mean bearish momentum or it could be a bear trap. So my simple way of reading daily bias is the swing points. The market is comprised of swing highs and swing lows. And those swing highs and swing lows either are going to form higher or lower. And if we're going to get a lower swing high and a lower swing low, more than likely the trend is going to be bearish or the momentum, short term or long term, is going to be bearish. Everything vice versa. If we break a swing high, that could be bullish momentum or a bull trap, getting people to go long. Instead, price fades that. But if we get higher swing highs and higher swing lows, momentum is most likely bullish and the trend is bullish as well. But then we have those bear traps, like I said before. Even though we ran the swing low, it's either one or the other. Is it a bearish momentum to continue selling in the direction of the break? Or are we just getting lower so that we get a cheaper opportunity for price to push back higher? And when I say we, I'm talking about the commercial speculators, the folks that actually control the price action, not us retail traders. We have the 20-day look back high here. Very close, clean highs too. Relatively equal highs. I would even be surprised if price runs that high. And it potentially gets us back up here where the intervention level is here. The fact that UJ isn't there yet is pretty surprising, but I want to see if it will get back up there. The other yen crosses have already got back to this point where they intervene, or where there was great, quote unquote, I'm putting this in quotations, great pressures of the yen gaining strength and price, declining for all the yen crosses. I want to see if price gets back up there. Right now, my scenario is if I'm going to take the stance of being bullish, it's going to happen like this. Run the low, go back here, come back up, higher swing low, higher swing highs. And then we keep pushing higher. After every down day, we will look to be a buyer. It's a pretty general rule because it's a counter trend candle. After down days in an uptrend, buying is most likely going to be successful. You can see that here in last month, right? Looking in May, look what happens after the down month. Down day, runs up for 3 days, down day, runs up for 3 days, down day, runs up for 3 days, down day, runs up for 2 days. Not saying it's going to always be consistent like that in the way I'm saying it here, but it will put things in your favor. You'll get more high quality trades or get in sync with the market more when you wait for the opposing candle for the day, for the trend. So today we had a down close candle, and I disclosed that to the chat today. I said that we had an outside bar. And what is an outside bar? Let's see if I have it up on another tab. We had an outside bar that formed here. Larry Williams' idea as well. Shout out to Larry Williams. Outside bar is simply a candle that takes out the previous daily high and previous daily low. Bar, candle, tomato, same thing. And the fact that it closes below the previous daily low as well, this could be a buy signal. Now, it's not guaranteed, but it's a buy signal according to Larry Williams, because what traders see this, they see this as the sky is falling, right? It took out the previous daily high and the low, and it closes down here. Everyone's going to run in and try and chase shorts. They see a large daily candle down too. So their mind goes, chase, chase, chase. I don't want to chase. I actually want to go opposite to them. So while they're jumping in short, I would look to go long. And we show that long setup on the lower time frame at the beginning of the Asian session. So this same fractal idea, look at what you see here. You're going to see it on the 1 minute time frame during the Asian session. So I'm going to go down to the 1 minute time frame just to show you guys. This is the start of the Asian session right here. I'm going to bring it back just to that. And you can see with this candle at the start of 8 p.m., huge candle that goes down. It also does what? It takes out the previous daily candle high and the previous daily candle low. Not that it's a daily chart or anything, but it takes out multiple lows as well and takes out highs. And it closes down way below these lows. So it's a smash candle and it's an outside bar too. So you got 2 for 1. These are all Larry Williams concepts if you're not familiar with it. And what I did was I said if price gets back up to this candle's high, I would look to go long here. You could also look to go long at the open as well. If you were taking the stance that this was a smash candle, get an earlier buy here or a buy up here. Larry Williams will tell you to buy here at the high. Place your stop loss below the smash candle or a couple pips below it. And that's exactly what I did. I went long. Show this in the chat. We went long here, stop loss down here, and we're looking for what? Some type of PD array that price can trade up into or clean highs that price can trade back into. So what I did was I said, let's see price trade back into an old low. And old low was here, which was that swing low. This is where I wanted price to target. And you can see that buy signal, right? It's a fractal idea, same thing. The daily was telling you to buy, and even the 1 minute here was telling you to buy. And we wanted to look to buy. Now we're in long, right? We were long right here at 8:05 p.m. New York Eastern Standard Time, and looking for price to run up into that old swing low that we just rated, and it did. And we're able to take that nice trade. Now, I'm not saying the trade would continue to run on, but when you get your wins, pay yourself and don't get greedy. It's a big thing a lot of people have issues with, and this is where we are currently with the Asian session. So from the daily, it was already telling you there was some type of buy signal. Not guaranteeing the buy signal would hold up, because if you're going to take it from the daily chart as a buy signal, you might have to have a larger stop loss because you're trading on a higher time frame. And Larry Williams' concepts were, a lot of them were based off of the daily chart, swing trading or position trading. So you could go long back at this candle's high here. But if you take a look, price already in this new daily candle for Tuesday that just opened not too long ago, it's already showing signs that it wants to push back up higher. Maybe we get back up to this swing high. So if we bring it back to here, we drop below the opening price, and we're going to look to see if price is going to trade higher above June's opening price. So we're buying cheap and looking to see if it will expand higher. So if you're looking for some type of swing trade, potentially, you want to buy below June's opening price. Now, I'm not sure if it's going to continue to pull lower again before going higher, but we have to take that proper risk and take that speculation. Are we going to get a turning point? And we know how turning points form. Most turning points are going to come by way of a swing low or a swing high. It is very obvious in the market that the swing points is what controls the market. You get a swing low. Look at this one, for example. This is a swing low, new leg. You get a swing high, could be a new leg down again. Who knows? We're not sure. But all those swing points are very crucial. Pay attention to it. Hopefully you found this insightful. This is your boy Deontay signing out. Peace.